Here's what happened in the economy this week. Inflation numbers came in, a look at Fed discussions, what's happening with consumer credit, and more. Let's get started. Before we begin, remember to like this video and subscribe for more economic updates. The economy generated a great deal of news this week, but perhaps the biggest was the revelation that Consumer Price Index came in faster than expected in September. On Thursday, the Labor Department announced that headline CPI rose 0.2 of a percentage point on the month and 2.4% year over year. The monthly rate matches the increase in August, and the annual rate is 0.1 of a point slower than the pace set in August. However, both numbers for September were 0.1 of a point faster than economists had projected. As for core CPI, which excludes food and energy prices, the news was a little bit more concerning. While monthly core CPI also came in even with the previous month, rising 0.3 of a point, the annual rate actually picked up speed, landing at 3.3%, 0.1 of a point faster than in August. And like headline numbers, both the monthly and annual core readings came in 0.1 of a point faster than projected. A big part of inflation relief last month came in from a 1.9% decline in energy prices, but upward price pressures were evident in a number of categories, including food, vehicle cost, medical care services, and even apparel prices, which jumped 1.1%. The report prompted some analysts to warn that the Fed and consumers may continue to face upside risk from inflation through at least the near term. It turns out some of those upside risks may have been prominent in the minds of several Federal Reserve policymakers last month as they were deliberating about how to proceed with interest rate reductions. On Wednesday, the central bank released the minutes of the Federal Open Market Committee's September meeting, where officials not only agreed to cut rates for the first time in more than 4 years, but did so by an extra-large 50 basis points. However, a review of the meeting summary reveals there was a fair bit of disagreement among participants about whether a decrease by 25 or 50 basis points was the better way to go. Some policymakers made clear they were less concerned about possible weakness in the labor market and more focused on whether inflation is moving sustainably back toward the 2% target. According to the minutes, some participants observed that they would have preferred a 25 basis point reduction of the target range at this meeting, and a few others indicated that they could have supported such a decision. It's worth noting that while almost every member of the Federal Open Market Committee ultimately voted in favor of the half-point cut, one did not. Governor Michelle Bowman cast her vote against it, marking the first time since 2005 a Fed governor dissented on the central bank interest rate decision. On Wednesday, the Fed revealed that consumer borrowing rose at a slower than expected pace in August. According to the numbers, total credit outstanding did rise another $8.9 billion in August. That increase comes on the heels of an upwardly revised July debt surge of $26.6 billion, the largest such increase since October 2022. Through August, total consumer credit outstanding, exclusive of mortgages, reached $5.098 trillion. The August rise was considerably smaller than expected. A Wall Street Journal survey of economists had projected total consumer credit to rise by more than $13 billion. Also of note is that revolving credit, which is primarily credit cards, fell 1.2% in August. It's the second time in the past 3 months that credit card balances have declined. Finally this week, the National Federation of Independent Business reported that its Small Business Optimism Index rose 0.3 of a point in September to a reading of 91.5. The news wasn't all good, however. For one thing, the index came in below the measure of 91.9 economists had projected. Also, September marks the 33rd consecutive month the index has fallen short of its historical average of 98. Perhaps most concerning is that a collateral measure, the NFIB's uncertainty index jumped 11 points in September to its highest reading on record. Small business owners are feeling more uncertain than ever, said NFIB chief economist Bill Dunkelberg, who added, "Many Main Street owners are left questioning whether future business conditions will improve." That's it for this week. Make sure to join us again on Monday when we keep you up to date on what's happening in the economy. This is Devlin Steele for Augusta Precious Metals signing out.